talk at the Novak Drew Center. My name is Chris McKenna. I run the Novak Drew Center in the Saïd Business School. And with new faces in the audience, I thought that I'd briefly tell you what the Novak Drew Center is. I'll turn it over to Ali Boucher to do the introduction. The Novak Drew Center is a research center located in the Saïd Business School of Oxford. And it's a center dedicated to the study of professionals and professional service firms. And we're very interested in professionals in a vast variety of ways, including things like questions about Islamic finance. The relationship, for example, between professionals and religion. So we're interested in a wide variety of topics, and our researchers, both at the faculty level and at the doctoral level and the postdoctoral level, look at things across the globe. And we're funded by a firm called Novak Drew, that's an intellectual property firm out of the United States. Please get to know our research on the web and get to know us a little bit better. Thank you very much for coming to this. And I will introduce Ali, who is organizing the seminar, and will give a further introduction.
Thank you, Chris. And, so I'd like to quickly introduce Harris Irfan. So he is kind enough to give a talk today. He is also the author of this book, Heaven's Bankers, which is the title of this talk, which was just published a couple of weeks or months ago. Harris Irfan is the managing director of the European Islamic Investment Bank. He was a co-founder of the Islamic finance branch at Deutsche Bank. He then headed the Islamic finance subsidiary at Barclays. And one can say that he's worked for years or even decades in Islamic finance. He'll talk about this book and Islamic finance more generally. So thank you very much for coming. And
thank you. I think what I'll do is, if the cameraman doesn't mind, I'm going to stand over here because it's kind of a little bit less intimate, I guess, to stand behind the lectern. We have about an hour and a half, right?
Yeah, about
okay.
An hour and a quarter.
And I guess there'll be a chance to ask questions and so on afterwards as well.
That's sort of the total.
Yeah.
So you'll want to contain it within.
Great. Okay. Well, thank you very much for the introduction, and thank you for inviting me here. I left Oxford in '93. So it's really nice to, I was just saying to Ali earlier, when I stepped out of the train station, there's a very familiar smell. It's a very nice smell, and I don't know what it is. Maybe it's the stone that many of the Oxford buildings are made out of, but it's a very nostalgic smell, and the smell being such a powerful sense, it really kind of put me back into university mode. So it's great to be back, albeit now wearing a suit and tie instead of, ripped jeans. I started writing Heaven's Bankers about 4 years ago, because a lot of friends and family approached me and said, look, I heard about this Islamic banking, and frankly, it looks like a bit of a con to me. I went to get a Sharia-compliant mortgage, and HSBC or whoever the provider was gave me a contract, and it looked like they'd crossed out the word interest and written in the word profit, and they charged me more for it. So what's so Islamic and ethical about that? And actually, I have a huge amount of sympathy with that. So what I wanted to do was to, I guess, explain how it works, debunk some of the myths. For example, the myth that Islamic finance is somehow equated with terrorist financing. It's a kind of thing you'd tend to hear on Fox or read in the Daily Mail. And yes, I have actually read that in the Daily Mail. So the book was born out of those sort of questions. Now, what I'm going to do is set the scene first of all. I'm going to talk about something called Bayt al-Hikmah. From about the 9th century onwards, Baghdad was the world's second largest city to Constantinople, had a population about 1 million, and its citizens existed on the cutting edge of science, technology, arts, literature, and so on. And it was largely a product of the four caliphs who ruled at that time. It's reported that the Caliph al-Ma'mun had a dream in which Aristotle came to him. And Aristotle says in this dream, knowledge has no borders, wisdom has no race or nationality. To block out ideas is to block out the kingdom of God. And he's reported then to have got up and instructed his men to travel to the furthest reaches of Byzantium and Persia and bring back their greatest books from their libraries. And he began assembling an institution or a library which was called Bayt al-Hikmah, the House of Wisdom. And some people think this is the forerunner of the golden age of Islamic enlightenment, a collection of scholars who expanded literature and arts and science and technology and astronomy. So al-Ma'mun and the three caliphs who came after him created many different wings of this library, of this institute, an observatory. And you know, sometimes 100 camels laden with books would come back from their travels overseas. And in some senses, you could say that Beit al-Hikmah was a sort of forerunner of the Renaissance. And it's interesting how we in Europe give so little credit to Islamic learning during that time, when in fact, down the Silk Road, you had Arab and Persian merchants not only selling silks and spices into southern Europe, but also disseminating ideas. They were the sort of the early management consultants of their time. So they'd be disseminating, for example, agricultural techniques, entrepreneurship, commerce and finance. And it's believed that many of the Crusaders took back many of those ideas into southern Europe and later on into northern Europe. So I guess at a time when Europe was very much in its dark ages, Islam was actually experiencing its golden age. And I think Beit al-Hikmah was a sort of a beginning to that. I want to set the scene in another way as well. I don't know if any of you know the story of the Mexican Fisherman. Is that familiar to you? Yeah, I'm seeing shakes of the head. So it's quite a well-known story, but perhaps with different protagonists. It's written by a German writer called Heinrich Boll. The version I know is called The Mexican Fisherman. And it goes something as follows. An American American tourist is visiting a coastal village in Mexico. And he sees a lone fisherman step out of his boat and carrying a large number of yellowfin tuna. And he compliments the fisherman on his catch. And he says, "How long did that take you to catch?" And the fisherman says, "Only a short while." And the American says, "Well, why didn't you stay out longer and catch more?" And the fisherman says, "Well, I have enough for my needs. Why do I need to catch more?" The American says, "Well, what do you do with your time?" He says, "Oh, I sleep late, I fish a little, I come home and I have a siesta with the wife, play with the kids, and in the evening we stroll into town and we sip wine and we sing songs with our friends." And the American scoffs at this. He says, "I'm a Harvard MBA, sorry, I should change that to Oxford MBA, and I'm a management consultant at McKinsey and I can help you." The fisherman is taken aback. He says, "Senor, how can you help me?" He says, "Well, you should stay out a little bit longer, catch more. With the extra proceeds, you buy a bigger boat, then eventually you buy a fleet of boats, and then eventually you move on and you cut out the middleman. You open your own canning factory, and then you control the product, the supply, the distribution. And eventually your expanding empire can go to Mexico City, and then Los Angeles, and then New York." And the fisherman says, "Well, how long will all this take?" And he says, "Oh, 15, 20 years. And the fisherman says, "Well, what happens next?" He says, "Well, this is where it gets really interesting, because then you go to the New York Stock Exchange and you float your shares in an initial public offering, and you make millions." And the fisherman says, "Millions, senor, but you know, what will I do then?" And the American with the Oxford MBA, who works for McKinsey, says, "Well, then you retire to a small coastal village and you fish a little and you sleep late and you play with your kids, and in the evening you stroll into town and you sing songs with your friends." So it's kind of a corny story, but I think it's kind of it's instructive because we have this obsession with GDP. We measure GDP in a particular way. But GDP doesn't measure other things that actually are beneficial for society. We don't take a very holistic view of commerce. We tend to think in terms of raw numbers. So we don't measure in GDP the literacy rate, or the suicide rate, or the divorce rate, or the effect on the environment. It's strange how if we all telecommuted and we worked every day from home, it's possible we might be more efficient. And it's undoubtedly we would reduce the amount of carbon emissions into the atmosphere. It'd be better for the environment if we didn't all travel into work. But actually it would have a detrimental effect on GDP, most likely, because we wouldn't be spending money on fuel, on trains, on cars. And that's kind of strange. It doesn't take a holistic view of commerce. And I guess I'm leaving this as a background story for us to think about as we go through the rest of this, because I think Islamic finance and ethical finance and socially responsible investing are much more holistic in the way they view commerce. And I think that there is a place for faith and morality in finance. Let's talk about, I don't know if anyone's read a book by David Graeber. Anyone know who David Graeber is? I see some nods heading. I think he's a very, very clever and interesting man. He's I guess the effective leader of the Occupy Wall Street movement. I think he coined the phrase, "We are the 1%." I always feel slightly weird when, dressed in a kind of pinstripes and a banker, talking about a guy who hates Wall Street and everything that it represents. But I think that my profession doesn't spend enough time listening to people like him. And actually he has a lot to say. For example, one of the most significant things he says is that money never originated in the form of barter. This is an economist's fallacy. Actually, money originated as debt. So agrarian societies 5,000 years ago had elaborate mechanisms to trade with one another. A farmer would sell his crop or buy something from a merchant, and he'd receive an IOU. And the merchant would then pass on the IOU to a carpenter who's fixing his door, and the carpenter would sell it on to somebody else who's doing another service for him. And eventually, the IOU comes back full circle to the farmer, who perhaps can pay for it in kind because his harvest is now up. So, according to anthropologists like David Graeber, money originates as debt in the form of these IOU notes. And what's very interesting is when a community becomes large enough, it has the ability to conquer and enslave a neighboring community. So, slaves are I guess, a consequence of power. What I find very interesting is, at that time, we're talking about Mesopotamia, 5,000 years ago, you have these industrial complexes which we refer to as temples. And they had granaries and stores of livestock and other commodities. And they would often lend out these commodities to be traded by merchants. And of course, they couldn't audit the profits and losses of these merchants. What they could say is, I'm going to give you X, and you're going to give me X plus Y% back, a fixed markup. So now you've got these interest-bearing contracts which are traded amongst temples and merchants. Now, of course, the merchants would have to offer collateral in order to guarantee the repayment of the debt, and that collateral could be grain, it could be livestock, it could be something else. Of course, if they don't have the relevant collateral to pay back their debt to the temple, they would have to potentially offer themselves, or their wife, or their children, or their children's children. And this becomes the most egregious manifestation of debt. Because now you didn't have to be war booty to be a slave. You could be anyone. And in times of bad harvest, you'd have this increasing divide between rich and poor. So this, I think, is the most interesting aspect of debt, and the fact that violent coercion is the primary enforcement mechanism. And this is a very strong argument, a very well-argued argument of anthropologists like David Graeber. Now, of course, eventually a community of slaves can become too big, and that presents a danger for the rulers. And so we read, for example, in the Bible, the governor of Judea, Nehemiah, instituted the law of Jubilee, which is a clean slate every Sabbath year, every seventh year. And the law of Jubilee meant that all debts would be wiped clean and debt peons would be returned to their family. And of course, this ensured that the ruler had less chance of being overthrown. It's interesting because about a year and a half ago, a couple of years ago, the ruler of Kuwait also decreed that Kuwaiti citizens would have certain debts wiped clean. And of course, that was at the time of the Arab Spring, which is a pretty sensible move for him to do. Let's move on to, not getting it to work, there we go. No, wrong. There we go, nature of money. I'm going to need some help on this one because there's some very interesting quotes from a 12th century theologian called Ghazali. He analyzed the nature of money, and he stated that God had created dirhams and dinars so that they may be circulated between hands and act as a fair judge between different commodities and work as a medium to acquire other things. And he concluded that whoever effects the transactions of money is in fact discarding the blessings of God and is committing injustice, because money is created for some other things, not for itself. So the one who has started trading in money itself has made it an objective, contrary to the original wisdom behind its creation, because it is an injustice to use money other than what it was created for. Now, he hadn't reached this view in isolation. He was actually building on the work of Aristotle, who had argued a very similar point about a millennium earlier, that gold and silver had no intrinsic value. And I think this is very, very key, because a lot of people, I'm sure you've read in the Financial Times and elsewhere, Islamic finance, and parenthetically it then states, which is finance without interest. Interest is forbidden in Islam. That's only an outcome, that's a corollary of the real, fundamental principle of Islamic finance, which is the nature of money, and that is that money is merely a medium of exchange. It's not in itself a valuable object to be traded as a commodity. And here we come into conflict with modern notions of the financial economy and the real economy, and I'm sure we're all aware that the financial economy and the real economy have diverged in recent years, and we saw with the collapse of Lehman's and others how far it's diverged. It's a gazillion-dollar industry, I don't know the numbers, but it clearly outstrips the real economy, and therefore it's a house of cards. I keep thinking I'm pressing this, but I'm fine. So I think that a theologian like Ghazali was, very prescient. He was predicting the rise of the modern financier, creating value out of intangibility, these derivative contracts that we read about now. And his rules of trade were very, very simple. It had to involve a transfer of ownership. The goods had to be in one's possession. There was no short selling, therefore. And there had to be tangibility of the underlying assets. So, for example, you couldn't trade money itself. You couldn't trade cash flows or debt. You could assign your debt to somebody else, but you couldn't trade it at a value above or below its par value. And here we find that Islamic finance is inherently, therefore, at odds with the fractional reserve banking system. And as we know, the fractional reserve banking system is about, if I'm a bank, I have £1 in my deposits and I lend out 5 or 10 or 20 pounds. So you could argue that the banking industry is a private monopoly that allows it to create money out of thin air, and many people do argue that point. And I'm sure people like David Graeber will argue that same point. So I guess that's the fundamental difference between Islamic finance and conventional finance, is the nature of money itself. Let's talk about caring capitalism. That's been in the news quite recently in many different ways. The history of Islamic finance is very long, and I'm not going to go through the whole thing, but just to condense it into 60 seconds. Sharia law is very misunderstood. I mean, I was on a radio program with Richard Bacon. I don't know if you know who Richard Bacon is. He's the ex-BBC Blue Peter presenter who got done for cocaine or something. And I very stupidly hadn't read up on this guy before I went to this interview, which is a classic error. And he's got some very left-leaning liberal views, views on capital punishment, views on human rights and so on. And I don't disagree with many of those views, even though I'm a Muslim, which sounds odd to say. But I got cornered because he asked me about the institution of Sharia law in Brunei, which would involve stoning people and chopping people's hands off. And I thought, oh my God, there's just no way I can win here, because there's just no way to answer this question. I think Sharia law in general has been grossly misunderstood in the West. And actually, if we took the time to look at how our own laws in this country and other Western jurisdictions have been set up, we'll find not only many commonalities, but much of the source of our law here in this country may well have come from those traders that I was talking about earlier, who disseminated these ideas into Southern Europe, and the Crusaders who brought back these ideas with them in the Middle Ages. So, I guess we live in a world where two societies are viewing each other in a very monolithic fashion across the divide. And there's a sense that never the twain shall meet. But actually, I think there is a huge amount of commonality. And if you look at the codification of Sharia law, it's not a simple process. It starts with the Quran, which is the word of God, and the actions of the Prophet, which are documented in a series of books called the Hadith. And then there are men who come after, and women who come after the Prophet, after his death, who then take those principles and they apply a certain amount of mental exertion on those principles, and they say, well, I think based on these actions of the Prophet during his life and the principles that I see written down in the Quran, this is the way we should behave towards our fellow man and woman. And therefore it's open to interpretation. And what we have today, and it's something I want to come back to at the end, is a recent, I would say, interpretation of Sharia, which is based on the last 50 years of this kind of post-colonial identity seeking by Muslim rulers who want to use religion as an instrument of control, rather than the previous 1,300 years, where if you examine it very carefully, Sharia law it's inclusive, it's tolerant, it's about human rights, property rights, women's rights. I and more importantly, my wife tends to think of Islam as a very feminist religion, very empowering for women, which is kind of odd because that isn't what people think generally in the West. But I think a careful study of the first 1,300 years might lead you to that conclusion. If you chose to focus on the last 50 years, you might reach a very different conclusion. Let's talk about caring capitalism, because I kind of gone off on a tangent there. One of the people who came after the death of the Prophet was a guy I consider the father of Islamic economics. Is somebody called Imam Abu Hanifa. And I guess to explain what kind of individual this was, I'll tell you a little story about him. He was before he became a scholar and a theologian, he was a trader of garments, I think specifically silk garments, if I'm not mistaken. And a woman came to his shop, and she wanted to sell him a garment, and she said she wanted 100 dinars for it. And he shook his head and said, no, it's worth more than that. And the woman was obviously a little bit surprised. Why would you want to pay more money for this? I'm offering it to you. And she said, okay, I'll sell it to you for 200. And he refused and said, no, it's more than that. And so she said 300 and then 400. And he continued to turn it down. And this woman got very exasperated and said, you're mocking me. And she turned to leave. And Abu Hanifa then said, no, wait, stop. And summoned an independent merchant and said, I want you to value this garment. And the merchant valued it at 500. And so Abu Hanifa decided to settle on a fair trade with this woman who brought the garment to him, so that he would make a reasonable profit, but that she wouldn't be taken advantage of. And this was an individual who felt that the free market is all well and good, and we should embrace it, but that there needs to be certain controls so that the weak and the vulnerable and the ignorant are not taken advantage of. And we see that in modern corporate governance standards, in the Mergers and Monopolies Commission and other bodies that are set up to protect the consumer. But it's a kind of a holistic, coming back to my argument about GDP and having a holistic view of what makes a good society. It's important that we have some inherent self-regulation, and Islam is about that inherent self-regulation, the discipline within that prevents us from taking advantage of people who can be taken advantage of easily. So I think this is a very instructive story about Abu Hanifa. He went on to found an eponymous school of thought, and it's one of the 4 or 5, depending on if you're Shia, the 5 schools of thought in Islam. And his disciples or his followers were a very liberally inclined and inquisitive bunch. So for example, the translation of all these great works that were brought back to the House of Wisdom on the backs of 100 camels that we talked about earlier, these included the works of the Greek philosophers. And who knows, maybe Europe would never had access to its heritage if it hadn't been for the Persian and Arab scholars who had translated these works in the first place, because those books would have been destroyed and disappeared and lost. So men like Abu Hanifa were responsible for codifying aspects of law, and in particular, Abu Hanifa codified aspects of commercial law. So for example, many of the developments in commercial and social interactions that were based on the life of the Prophet led to the creation of the money economy. Gold and silver became paper notes. We had checks. The word sak, S-A-K, is the derivation of the word check. We had what we now call letters of credit, which were suftaja. We had a type of money transfer system across continents, which was called hawala. So we can see many aspects of modern commerce the seeds of which were beginning to be planted around this time by these sorts of men. Where I kind of lost the trail, and Chris, you and I were talking about this earlier, was around the time of the Ottomans. So although we saw the development of this Islamic economy taking place through the Middle Ages, by the time we get to the Ottomans, there's a sort of, I guess, a dilution of those ideas. And Southern Europe and Northern Europe later continued to look to conventional finance, interest-bearing finance. And those ideas kind of started to dilute the idea of Islamic economics in the Ottoman Empire. And that's where the trail run cold, and I'll pick that up in a minute. Interestingly, just I guess a slight diversion. In the Middle Ages, of course, the church specifically banned usury, and this is a well-known, I don't know if I should probably have, when I was talking about a brief history of debt, I think this is a really instructive quote, because it's the only example where Jesus has used violence that I'm aware of. This is at the time of the Passover, so he would have been in the temple of Herod at a time that there would have been thousands, maybe tens of thousands of pilgrims passing through. And making a whip of cords, this is from the book of John and book of Matthew, and making a whip of cords, he drove them all out of the temple with the sheep and the oxen, and he poured out the coins of the money changers and overturned their tables and the seats of them that sold doves. And he told those that sold the pigeons, take these things away and do not make my Father's house a house of trade. My house shall be called a house of prayer, but you make it a den of robbers. So this is really interesting. The Christian world is banned from usury. It cannot charge interest on any loan. And today we see this as a widespread, normal practice. How did that happen? Well, in the Middle Ages, Christian financiers got very creative, just as Islamic bankers are very creative today. Hence the suspicion, with which I'm addressed questions by friends and family. And they worked out that if they took 3 contracts, each of which was compliant with church law, that they could put these 3 contracts together and effectively create a loan with interest. And the church accepted it because, hey, every individual contract was church compliant. And we use the phrase nowadays, Sharia compliant in Islamic banking. And eventually the church, I guess, realized that, hey, it's not such a big deal. Why don't we say usury is excessive interest, and interest itself is okay up to a certain point? So there was a dilution of that original commandment, if you like. And then eventually by 1917, the Vatican itself was investing in fixed income securities, and interest was completely compliant with church law. So I guess Islamic economics is born of the theory that the free market is a good thing, but that it needs to have certain boundaries which protect the innocent and the vulnerable. Which brings us on to the modern day. I guess one of the first examples of modern Islamic finance was in 1963. A famous Egyptian economist, Ahmed al-Nagar, he decided that he would create an experiment in the town of Mitghamar, which is about 80 miles north of Cairo. And this institution would take depositors' money and then invest that depositors' money in real economy projects, local industrial projects, for example. And the idea being that this would not be an institution that merely guarantees a return in the form of a fixed interest deposit, but actually invested in the real economy, which is supposedly what Islamic economy is all about. And that experiment eventually fizzled out, and I think was bought by the Nasser Social Bank. But it was the forerunner of modern Islamic finance institutions, which are supposed to operate, I say, on the basis of profit and loss sharing. So in other words, depositors' money is not necessarily guaranteed a return, but is based on the investment activities of the bank. And that's a somewhat more complicated story in real life, and it's something we can talk about later if we like. But what happened in around the mid-90s is that the big conventional banks started getting on the act, and they realized that this was a large demographic and they can make money out of them. So why don't we create our own Islamic finance departments? And I remember in 1996, I was working in the city and I was a very junior banker, And I happened to be invited to a seminar that was run by a guy called Iqbal Khan. We were ushered into this room, and in the corner was a guy sitting there with his Arabic headrobe pulled tightly over his features, and I guess he looked a little bit like Obi-Wan Kenobi in Star Wars, sitting there in the corner, not saying anything. But this was Sheikh Nizam Yaqubi, who's one of the world's most famous scholars. And he spent that evening explaining to us, he didn't have a lightsaber, but he had a very sharp wit. He spent the evening explaining to us, how Islamic finance worked, and what we could do about it. Because we were a very disparate group of junior bankers in the city, and we'd just been invited, I think, because it was a release from our daily grind, I guess. And Iqbal Khan was, I think, a very foresighted, very visionary sort of leader. He wanted to create not just a local market leading bureau, but a global brand in Islamic finance. So he could offer Islamic financial services all over the world through the HSBC brand, and it became known as HSBC Amana. And this was a sort of a recruiting ground for him. The city was a very fertile ground. He was very close to Stephen Green and John Bond, who would both go on to become CEO and chairman of HSBC. And they were both very keen on, in fact, Stephen Green is an ordained minister of the Church of England, I think. They would both be very keen on Islamic finance, and that's why his vision took off. He's very much a financial evangelist. Sadly, when he left, or when Michael Gagan came on board at HSBC, Islamic finance was seen as too niche, too little understood by senior management, I think. And when senior management don't understand things so clearly, they tend to attach a risk premium to it, and therefore it becomes less profitable for them in their minds. But when you look at the demographics, 1.6 billion people around the world, heavily underbanked, it is a huge opportunity. And right now they're deeply suspicious, A, of conventional banks, but B, of Islamic banks as well. Because, as I said earlier, they look at the contract and it looks exactly the same as the conventional contract, except they get charged more. So it was a fantastic achievement of Iqbal Khan to create HSBC Amana, but it didn't last as long as it should have. Until Deutsche Bank came on the scene, I used to be a project financier, in other words, financing infrastructure projects for Deutsche Bank until they placed me in the Middle East. So they dragged and dropped me into the Dubai office one day in 2001. And a lot of clients came to our door and said, well, it's great that you're here, Deutsche Bank, but we actually want to do these deals on a Sharia compliant basis. And being investment bankers, we blagged our way and said, yeah, sure, we know what to do. But of course we didn't, and we learned at the feet of the scholars. And one of the scholars that we met is somebody that I refer to as the billion-dollar scholar. And his name is Sheikh Hussein Hamid Hassan. He's now in his late 80s, I think, very hale and hearty, huge amounts of energy. And he was, I guess, our mentor and the architect of many of our deals. So many of the recent innovations, the sukuk transactions that we read about in the Financial Times, these are the Islamic bonds. Many of the early innovations were done by Deutsche Bank. The creation of a derivatives platform, which had never been done before in Islamic finance. One particular deal I thought was very instructive was we advised a private equity firm on the takeover of a company in Egypt called Egyptian Fertilizers Company. And it was at the time, I think it still is, the largest buyout of any corporate in the Middle East at that time, and it was Sharia compliant. So we had to arrange about, I think, $800 million worth of senior debt. And of course, ordinarily, you'd lend $800 million, you'd take some security, and you'd receive some interest back. He wouldn't allow, this is the scholar, Sheikh Hussein, would not allow us to use a very common contractual structure in Islamic finance known as the commodity murabaha, which is essentially a kind of a derivation, if you like, or the modern version of the Christian financier's contractum trinius. This was the 3 contracts in one that created a loan with interest. So the commodity murabaha, which was the modern version of this synthetic contract, was not allowed. He said, no, you have to do something real economy. We said, how about if we, the bank, Deutsche Bank, bought the product that this company makes, which is fertilizer, for a value of $800 million. And rather than having it delivered in bags of fertilizer to our door on London Wall, we actually have an off-taker who guarantees to take it away and buy it. And he said, that's it. That's exactly it. That's a real economy transaction. So here we have a bank not acting as a lender, but acting as a merchant, where it buys and then sells the underlying product. So this is a real economy transaction. And there's therefore a one-to-one relationship between the real economy and the financial economy. And it would mean that we wouldn't have had lines of people queuing outside Northern Rock and walking out of Lehman Brothers with boxes in their hand if we had followed that basic rule. I'm not saying that Islamic finance is the solution. I'm saying that there is a lot inherently wrong with the modern financial economic system. And I think much of it could be solved by this approach to prioritizing the real economy. So that's an example of the kind of work we did with this scholar. And I guess it leads me on to the general concept of ethics in finance. Did any of you see a Panorama program about a year ago on charities? They talked about Comic Relief and Save the Children, and they did an expose on how they were sitting on £90 million worth of extra funds, which of course there's nothing wrong with that. They after all have to have an endowment in place, but that they were investing it in ways which were not according to the sentiments of donors. So for example, many of these investments would be in arms companies, tobacco, alcohol. And Comic Relief actually has a mission statement, which is that it works to reduce alcohol misuse and minimize alcohol-related harm. But companies like Diageo were very high in their stock portfolio. Save the Children had a fuel poverty campaign in which there were leaked memos that showed that they censored criticism of energy firms who acted as corporate partners to the charity. Again, there's clearly some kind of conflict of interest there. More recently, we've had the Church of England criticised over the subject of payday lenders. As I'm sure you know, Archbishop Justin Welby, he went on record to say that he would compete Wonga out of existence by establishing credit unions in the church. And the very next day, the Financial Times discovered that the church was a seed investor in Wonga, which was a huge disaster. Obviously, he's very embarrassed by this. I can't blame the man, because you can hardly expect the Archbishop of Canterbury to be analysing every single financial statement that his church's pension fund, clearly this is a huge PR disaster. And I find it a delicious irony that had he employed an Islamic bank, a Sharia-compliant asset manager, to manage the church's money, he would never have had this problem, because they would have had a holistic view on the types of companies that they're investing in. I'm firmly of the opinion that faith and finance, mixing faith and finance shouldn't be detrimental to returns. And in fact, in the long run, I'm 100% convinced that actually applying a degree of morality to your commercial investments is good for business. So highly leveraged stocks that profit out of others' misfortunes, stocks that involve short selling of companies. It's interesting, by the way, at the time of the financial crisis, many governments around the world, including the US and the UK, banned short selling of certain stocks. You can imagine a Daily Mail headline saying US and UK governments implement Sharia law, right? I mean, clearly there are, as I've been saying, commonalities between the ethical principles of this so-called alien system of law, Sharia law, and modern legal systems. So Islamic funds have actually done very well during the financial crisis because they weren't exposed to these highly leveraged companies. They weren't exposed to financial stocks in particular. So they did, if you do a performance chart, you'll see they've actually outperformed many of their conventional counterparts. We were talking earlier about derivatives and how Deutsche Bank had set up a platform to produce Sharia-compliant derivative contracts. This is probably the most controversial product that's been issued out of the Islamic finance industry. Essentially what we did at Deutsche was we set up a black box, and we said that we can replicate the returns of any financial instrument no matter how exotic it is, and give it to Islamically sensitive investors, and it's Sharia compliant. And the way we did that, and this is my confessional, the way we did that was we would take the money in from the Islamic investor, drop it into a segregated account. We would use a swap contract, which would swap away the return of the commodities that we'd used, these are Sharia compliant commodities, that we'd used to buy with the money the investor gave us, and swap them with something else. It could have been pork belly futures. It could have been the index of distillery companies. It could have been casinos in Las Vegas. It didn't matter because it was a mathematical formula. And actually the money the investor was putting into this black box was only buying copper on the London Metal Exchange or the share of a company that was Sharia compliant. So this swap technology was very, very clever, but unfortunately it was very much misused, particularly by salespeople who, now that they had a generic fatwa, a generic legal opinion that this was a compliant way of offering products to customers, they could now take that fatwa and start issuing all sorts of weird and wonderful products with it. One of the ones that caused us the most controversy was a hedge fund, which was produced by Goldman Sachs, who are, let's face it, they have a particular reputation. And the moment this came up, there was a press conference and the product was launched. The head of the team at Deutsche Bank said something that was, I think, also very telling. And it was, we, meaning Deutsche Bank, will issue conservative product for conservative investors and aggressive product for aggressive investors. Now, this is absolutely the wrong thing to say, because it's like being an SRI fund and telling people, well, we kind of play a little bit fast and loose with the concept of SRI, and some things are a little bit less wholesome than others. But we're prepared to invest whatever you guys want us to invest in. And I think that's the wrong approach, because the Islamic finance industry and the Islamic economy in general is meant to be based on a holistic set of standards. And one of the difficulties we have is a difference of interpretation and sometimes a misuse by bankers and lawyers who run with these generic fatwas and issue new products. There was a very well-publicized spat between two scholars. One was Sheikh Hussein Hassan, who was the architect of this along with us, and the other was an American scholar called Sheikh Yusuf de Lorenzo, who wrote to the papers and published an article in which he called this generic fatwa that issued these Sharia-compliant derivative products the Doomsday Fatwa. And I think he was right, because it was very much a case of letter versus spirit. We might have been following the letter of the law, but we certainly weren't following the spirit of the law, and certainly our bankers had no understanding or interest in what is the spirit of the law. Do we consider this transaction to be ethical? And instead, what we find happening in the Islamic finance industry, and I'm sure you're hearing Boris Johnson talking about how Islamic money is coming into the UK, into London in particular, and how it's creating products like the Shard and Chelsea Barracks and One Hyde Park. And I sometimes stop and think, well, this is all great, but why are we producing luxury apartments for the 1%? Not something for the 99%. Surely the Islamic economy is about, and if I go back to the original history of Islam, the second caliph was a man who instituted an endowment called the Bayt al-Mal, which was, if you like, the treasury of the state at the time. And the objective of this treasury was to fund the pensions of widows, of orphans, of the disabled, of the infirm, the elderly. Again, it was an idea of protection of the weak. And this was a fundamental aspect of the Islamic economy. How can the Islamic finance industry only be about creating 7-star underwater hotels in Dubai and islands in the sea? And there is a company called Nakheel which is funded with Islamic finance in Dubai, and that's what it does. It seems sort of rather strange to me. Anyway. One more thing to say on the Doomsday Fatwa. I was at a conference where somebody stood up and asked, and this was an Islamic finance conference, of course, he asked, how can I create a credit default swap on Greek sovereign debt For those of you who don't know, the CDS is a sort of insurance policy. And if I buy this insurance policy and the underlying of this insurance policy, let's say the Greek economy goes under, then I'm paid out a sum of money by the insurer. Now imagine if your neighbor was a convicted arsonist and you discovered that he'd taken out a policy on your house, right? Of course, the insurance industry wouldn't allow you to do this. It's illegal because he doesn't have an intrinsic interest in your house. And yet here is an Islamic financier standing up and saying, how can I profit from the misfortune of the Greek economy in a Sharia compliant method? And yes, he can do it if he has a series of contracts which are deemed to be Sharia compliant. But is it really Sharia compliant? Because it's certainly not following the spirit of Sharia law.
So to that point, I mean, so, how do you reconcile, I mean, if you just can just pick up on your comparison with social investment. So where does it end? Does it make a difference who the counterparties are? I mean, basically you're saying they're agnostic counterparties, and sort of, are they agnostic? I mean, is there any kind of ethical screening in terms of how companies are managed, or how they treat labor, or? It's
a very good question, and I think the treating of labor is a very interesting point as well, because we see a number of Middle Eastern companies, construction companies in particular, that have particularly awful labor practices. And often the scholars who sign off on these products are only looking at the specifics of the product itself. So they look at a loan financing transaction or some form of investment, and they say, yeah, the contracts, we read the contracts, and they all seem to be Sharia compliant to us. Increasingly, though, nowadays, they're starting to look holistically at the wider picture. So they, in theory at least, if an arms manufacturer were to raise a sukuk, an Islamic bond, in theory, I can imagine probably more than 50% of scholars nowadays would say, hang on, the contracts may be compliant, but we don't like the business of this company, and therefore we're not going to allow it. So that message is starting to filter through. And the Islamic finance industry is at a very early stage, if you like. Actually, no, that's not fair. It's been around for a while now, since the 1960s at least, possibly earlier. You would think that it's in sort of adolescence by now, and it ought to be learning its lesson. It's not exactly nascent. This is a very, very tough conversation that people are having in the industry. Nobody's rewarded for fighting back. If you pop your head above the parapet and say, I don't think this is particularly Sharia compliant, the bank doesn't employ you anymore. You're rewarded for being acquiescent. And the most senior people in this industry are the most acquiescent. They've accepted the status quo, and that's how they want it to be. So it's very, very difficult. But there's an increasing body of people within the industry who are very uncomfortable with its practices. And so they want to see things like this happen. They want to have a holistic understanding of what's the environmental practices of this company, what's the labor practices, how does it treat its customers, its suppliers, and so on. Not just the contracts that we're using to raise this money. So that is happening, I think, very, very slowly. And actually, in some ways, I guess I wanted to write about that aspect of Islamic finance because I felt it wasn't being discussed enough. The moment you start discussing it in conferences, you don't get asked back to do another conference, because you're then at loggerheads with everybody else on your panel. And panels are always composed of 4 CEOs who all have exactly the same view on Islamic finance, and it's very boring. They trot out the same bland platitudes, and it's just nonsense. So it's very, very difficult to have that discussion. I'm hoping that discussion will happen more now. Oops, I think I've done something wrong here. I'm just press. There we go. Let's talk about Goldman Sachs. Anyone read this quote from Rolling Stone magazine? I'll read it out to you for those who are unfamiliar. Matt Taibbi is somebody who wrote a very interesting article on Goldman Sachs about a couple of years ago. And he said, the world's most powerful investment bank is a great vampire squid wrapped around the face of humanity, relentlessly jamming its blood funnel into anything that smells like money. I was approached by Goldman Sachs in 2011 because they smelt money in Islamic finance. And at that time, I just left Barclays to set up my own Islamic finance advisory firm. And Goldman's came to me, and I was very flattered because this was one of my first clients. And they said, we want to raise $2 billion in the form of a sukuk, an Islamic bond, And we want to do it for a conventional financial services institution. Now, they didn't tell me it was Goldman Sachs, but they told me it was a bank. And I said, okay, well, it can be done. I mean, clearly you're financing activities which are not Sharia compliant, so you need to find an activity in the bank which is, for example, some trading activity that is perfectly compliant. And that will become the underlying business activity against which you raise this capital. And they said, no, we want to use the commodity murabaha structure. You remember this was the contractual structure, which is a bit like contractum trineus. It's a sort of synthetic structure that gets around the ban against interest. I said, well, I don't think that's a very good idea, and the market will have difficulty accepting that. Let's talk about other ways we can do this. Show me your assets. Show me what we can do with them and how we can create a financial transaction around this real economy asset. They said, no. I've got approvals from my credit committee, from my compliance department, from my legal department, from my traders, from my this, from my that. This is what we want to go with. I said, okay, there is only one way that you can use a commodity murabaha transaction and have it accepted by the market. First of all, tell me, what are you going to do with the money? And these are literally their words. Don't ask too many questions. So this is Goldman Sachs telling me, an Islamic finance advisor who wants to raise money for Islamic investors, don't ask too many questions. At which point I said, look, thank you very much, and I'm really flattered that you guys came to me. I'm going to have to pass on this because I have serious reservations here. And they found another firm who would come on in. Who would go on and, if you like, rubber stamp this deal and give them the fatwa that they needed. And it was for Goldman Sachs. And strangely enough, they didn't sell a penny of it. So it kind of, the prospectuses, gathered dust on the shelves of their law firms. But because they hadn't listened to that advice, they discovered that actually Islamic investors do actually care about the flow of money. They care what their dollar is going to do. And if they think it's going to be used for whatever it is Goldman Sachs does for a living, torture bunny rabbits and eat babies for breakfast or whatever, then they're not going to want to hand the money over. Incidentally, Goldman came back to the market earlier this year, and they issued, instead of $2 billion, they went for a $500 million issuance. They kind of fudged it this time. So they kind of took on board the advice that they wouldn't use a commodity murabaha. But they did that for 51% of the deal. So 51% of the deal was funded with a real economy transaction and 49% with this synthetic structure. Now, people bought it this time, but they didn't get the orders they were hoping for. And what was also very interesting is the moment it entered the secondary market, it started trading below par, which I think, again, is a very interesting, because that doesn't happen very often with Islamic bonds. They're highly in demand, not enough of them out there. Islamic institutions need to have them on their books for their portfolios. It's very rare for it to be trading below par. So I think a very instructive lesson, incidentally, not that this is Schadenfreude, but the advisory firm who advised them closed down the year after. Okay, let's talk about the future of Islamic finance, and I guess we have some time at the end for questions. I was trying to find a way to end my book, and I didn't know how to. And quite by chance, I was in the US, and somebody introduced me to a scholar called Mahmoud Al-Gamal. He's a very interesting guy, very blunt scholar, very direct, fallen out with virtually everybody in the industry. None of the other scholars want to work with him. He doesn't want to work in the industry. He thinks it's a sham. And I had a very interesting conversation, because the moment he met me, he told me that I was suffering from cognitive dissonance. In other words, I was holding two conflicting ideas in my mind. On the one hand, I thought I was doing something noble and well-intentioned, and I was going to change the world. Maybe that's a view I had when I was a student. And on the other hand, actually, I realized that the products that I'm putting out there may follow the letter of Sharia, but they certainly don't follow the spirit. There's nothing really, truly ethical about financing another gargantuan corporate monster, building 5-star apartments in central London for the very, very rich few. So he was quite right, and I was quite pleased to have that conversation, because I was, for the first time, I guess, confronted with my cognitive dissonance. And this is an inherent conflict that we have in the Islamic finance industry right now, and I don't know which way it's going to play out. I don't know whether, it will truly change for the better, and it will be a genuine alternative financing system, not just for Muslims, but for everyone. Because if you look, for example, at China, I think 40% of depositors if I'm right, 40% of depositors in Islamic banks in Malaysia, are Chinese customers. So in theory, I'm convinced that the ideal of the Islamic economy, and maybe we don't even want to use the word Islamic, we don't want to use words like Sharia because of the connotations that it has in this part of the world. There is a future, I think, for ethical finance if done right. But I very much feel that because of this problem we have with acquiescence in our industry, that we are, for every one step forward I take, I end up taking 2 steps back. So I haven't really, I haven't worked out whether this industry is going to be successful in the manner I want it to be successful. And I guess that's another motivation for me wanting to write that book. I've been accused of being pessimistic, and sometimes I give career talks and so on to students, and I sometimes get told, wow, you're really pessimistic about this industry. You really don't think it's, you're almost telling me it's not worth entering it. And I say, well, I'm sorry if I came across like that. I didn't mean to, because actually I am optimistic about the future. And I think that if there's enough of you guys and you're motivated enough, that you can actually change the industry. Right now, it's reached a sort of stagnation point, and I think we need to reverse that stagnation. So I'm optimistic ultimately. I think in the same way as the thirst for knowledge in early Islam meant that Southern Europe had a dissemination of ideas along the Silk Route. And as I said, these management consultants, these early management consultants were disseminating ideas of technology, of philosophy, of commerce, of entrepreneurship, astronomy, mathematics into Europe at that time. Maybe Islamic finance is a way of bridging this gap, this monolithic gap that we were talking about earlier between East and West. So I'm hopeful in that regard, and I hope that the Islamic economy can be something that's beneficial to all of mankind rather than just a demographic of 1.6 billion people. That's it from me.